Hey guys, welcome back to the channel. In this video, we're going to go over some information about options. We're going to go over specifically my experience with options this past week. I recently just started trading options, and I'm going to tell you one that I succeeded at, and I'm going to tell you one that I miserably failed at. But more importantly, I'm going to tell you why it happened, what I learned from it, and what I plan to do moving forward on these options. Okay, so I'm going to tell you just kind of basically what the options do, how to get approved on TD Ameritrade, and kind of go from there. So I'm not telling you to buy these things. I probably will actually never put any of the calls or anything or puts that I have online, to be honest with you, because these are pretty risky from what I found out. I'll go over the charts with you, of course, but you know, that's going to be up to you guys to make the decision on if you want to do that. Okay, so basically these options are, you're going to call out what you think a stock is going to do. All right, so if I have a stock trading at $5 a share, and all of a sudden it has a lot of momentum and it gets to $10 and it pulls back and it bounces off of like $9.50 and it starts kind of coming back up, and I'm like, oh man, this thing may hit, you know, 11 bucks. Then you can take out a contract, and that would be a call because you think it's going to go up for, let's say, $11. And as it starts going up, you'll start making money, and then if it hits your strike price of $11 and anything beyond that, you'll make a certain percentage. And I'm going to show you a website of how you can actually calculate your potential return on your investment here in a second. Okay, so calls are basically, you're calling the stock price to go up and hit a certain strike price, okay, by a certain date. So you'll have an expiration date on it as well, and we'll talk about that more in a second. Your puts are going to be basically the opposite. You're going to say, well, this stock has run up, you know, 100%, 200% in the past week or the past day, and you can kind of identify, well, this is not going to last. This is going to crash down. People are going to take profits, blah blah blah. Then you can say, I think it's going to come down to this strike price, and then as it comes down to that price, or if it hits that price and goes further below, then obviously you're going to make money on that as well. Okay, so let's talk about what happened. So this past week, I did I targeted AMC, you know, several times. I did 2 swing trades on AMC plus an option that earned 44%. That was my first call option that I've ever done. You know, I had been studying AMC for the past couple of weeks, and it was on my, you know, weekly stock pick video from last week, and, you know, earned overall on the week was about 54% or so, or 55%, I think it was, you know, this past week, right? So what happened there, boom, called it out, and ended it actually before the earnings call. I got out of the option, took my profits, and I didn't put anything else back in to AMC. I should have stuck with them, because I actually could have done a put option, because I did call that it was going to pull back. I could have made a killing on that. Instead, I shifted my focus elsewhere and messed up pretty bad. So I got kind of greedy here on Tesla. I said, okay, after the annual shareholder meeting when they approved the stock split, what's going to happen is it's going to start moving up and up and up, and people are just going to go crazy. Well, they approved the stock split, and it shot up. After hours, I was up on my option. Okay, it actually hit like about 9:30, and I was going to sell on Friday, because I thought coming into Friday, man, it was going to boom and go crazy. Well, what happened was, for one, the job numbers came out, and then for two, they had some type of article about Tesla, a negative article about Tesla, and the price started dropping. Even as the market started to kind of recover, Tesla continued to fall. All right, so that was bad. That was bad. So what happened was, I kept seeing it fall down and down and down, and thought, okay, we just got to survive the open. It's going to turn back around, and we're going to at least break even on this option. Well, the problem was it didn't. It fell down below 900. Okay, I was down, and I was like, oh man, I got to do something else. So I decided I'm going to revenge trade. Okay, I'm going to take another option call out, because it was at about 880, and I said, okay, it's going to raise at least $5 from here, right? So I'll get an option call at 885, expiration on the 5th, which was Friday. So one day, really just a couple hour option call. And then what happened, it started going down further and further and further. I ended up having to sell by the end of the day. Pretty much every penny that I put in, I lost. I was able to salvage a couple $100 out of the deal, but overall took a big hit on this option here as well. Okay, and what did I learn? Okay, so here's what I learned from this situation. I didn't research as much and keep up with Tesla like I did for AMC. I was not prepared to really do that option like I would have been for AMC. I should have just gone with my gut and, you know, took my 44% and then turned around, did a put on it, and then I probably would have made over 100% on the next option if I would have just done that. Okay, I got greedy and looked for the quick buck. I thought that Tesla was going to run up. I wanted to do just a one-day expiration date because I knew that I was going to make more money, although the safer bet would have been to put it about 2 or 3 weeks out. All right, that way if we have a nasty day in the market like we did on Tesla on Friday, at least I give it some time to turn itself around and get back to where it's supposed to be, in my opinion. Okay, and I also let my emotions kind of take over wild trading. This is wild trading. I'm supposed to say wild trading. Okay, so I really got, you know, my emotions got the best of me there, and it goes to show me that I have a lot to learn when dealing with options, and I just need to treat it like I do on normal swing trading. Every time you feel that in your stomach that you're getting, you know, a little nervous or you're getting anxious and you're like, oh, should I do this? Should I do this? That's when, you know, we need to back away. Okay, and I learned that on regular swing trading, and I need to obviously learn the same thing on options. So everyone probably has a story where they've lost money on either swing trading and options and things like that. And I'm just glad I learned it early, okay, because it caught my attention, and now I know what I need to do moving forward. So what now? Okay, so now I'm going to be patient. I'm going to study. I'm going to focus on puts because I'm a lot more accurate on the charts telling when something's about to fall down, technically speaking, as opposed to when it's going to go up. All right, to me it's a lot easier to call out a put. That's going to be my primary focus on you know, on options moving forward, unless we have like an AMC when I kind of have a good indication of earnings is coming out and I can go ahead and buy an option and ride the wave up like we did this past week. Okay, I'm going to start off with small amounts and try to get consistent wins until I can recoup my investment that I lost on Friday, which is very possible to do in the near future, in my opinion, is if I can be accurate with it. I was able to salvage about $200 off of that option, the bad options call. So that $200 is basically what I have now to use towards options, and that's all I'm giving myself. That's my allowance because I lost everything else. So I want to make that money that I made back. That's my first primary goal. Even if it takes me, you know, a few months to do it, I'm just going to try to get small and consistent wins. However, I do feel that I should be able to make it back on several, you know, put options that are pretty accurate. All right, guys, so the last thing I'm going to show you is this is optionsprofitcalculator.com. This will be linked in the description below. This is where you can come online and see what a potential option trade will give you. Okay, so if I want to do a call option, okay, which is a long call, I think something's going up, I would click long call. If I want to do a put option, I'm going to do this. So let's say hypothetically I want to be bearish and I want to say that a stock's about to come down. All right, so for example, let's say let's call AMC. All right, AMC, and it'll bring you up the current price, which is $22.45, and then you're going to select an option. It's going to give you expiration dates. I would recommend, based on this past experience, get an expiration date a little bit further out. You're going to make a little bit less probably, I would assume. However, it gives yourself a little bit of wiggle room. So let's say I do August 26th, and I'm going to think that it's going to come down eventually to, I'm going to call $19, I'm going to say $19, even if it's just temporary, okay? And then from there, I'm going to calculate how much money I can make. And here's the estimated returns. My cost is going to be $155. The maximum return I could possibly make off of this is $1,745. All right. And then my break even at expiration should be $17.45. Probability of profit 21.9%. So it's kind of a low probability of profit in my opinion. So I would maybe want to do something a little bit different. Okay, so you can go on this and do the same thing with call options. You can say, like, if I thought AMC was going to hit $24, then I would do the opposite, and I would pick an option to where I thought that it was going to actually go up to $24, and it'll kind of give you a spread of what they think that that might be and what you can make. Okay, and this kind of shows just where it's at, 22.45, roughly around here. And then as the price goes down, you see that you start to kind of get more into the green until, you know, as low as if it continues to go down lower before your expiration, you'll just make a lot more money on your put option. Okay, all right, guys, I just wanted to share that story with you and let you know. You know, I often talk about things that I do correctly, and I also want to talk about the things that I've done incorrectly and talk about how I've learned from them, what I plan on doing moving forward. Because also there's probably some people out there that felt like I have, they're like, dang, I screwed up, I don't know where to go from here. All you can do is pick up the pieces and learn and move forward from here. And that's pretty much all I can do as well. As I can tell you, I felt really bad after losing that amount of money, but now that I'm regrouped, I'm ready to go learn and make all of it back and then some. Okay, anyway, guys, that's all I got for you in this video. Let me know your comments below. Other than that, we'll catch you in the next one.